Welcome to our short interview series about affordable housing and home ownership and wealth building and community development. My name is Mike Loftin, and I'm a non-resident fellow at the Urban Institute. And my day job is I'm the CEO of HomeWise, a Mexico-based social enterprise that works largely in home ownership and community development issues. So today we have a very special guest, Brett Theodos from the Urban Institute. Who's a full-time person there. I guess you're not a non-resident fellow. You must be a resident. But he does a lot of good work, a lot on CDFI stuff and capital flows. He's, just I think you have a really wide range of portfolio of what the kinds of stuff you research and write about. So welcome, Brett.
Thanks. Good to be with you, Mike.
So one thing I know that, because I've followed your work for quite a while now, and I know you've done a lot of research that's been centered on capital flows, or actually where it fails to flow oftentimes, which oftentimes is lower income communities and communities of color. And I know you one of the things that you focus on is the role of community development financial institutions, or CDFIs, that oftentimes help, or at least are hoping to help, make that capital flow work better for communities. So maybe you could tell us more about your research on the role CDFI plays, and what are they doing now? What could be done better?
CDFIs are integral to community finance, and at the same time, they're small in comparison with mainstream market finance, and so I've been working for several years to try to quantify and also qualify where CDFIs are working, how much volume they're putting out, what difference that's making to the people that they're serving, whether that's through a loan or an equity investment or through some coaching or development services. And then also to try to articulate, where are there still gaps? Where are there needs? So we've got 1,100, now 1,200 CDFIs across this country, a lot of CDFIs. And yet our research shows that over a quarter of counties in the US had no meaningful CDFI volume or activity. And so even CDFIs have to respond to market pressures. They're more in some communities than in other communities, and they're more in certain types of investment than other types of investment. And so there's a need for CDFIs to grow, especially in the housing finance space, but also especially in rural areas and other markets that are harder to serve.
Well, when you say they're concentrating in certain kind of areas, business areas, I assume, where do you see there's relatively good coverage in terms of the kinds of community development issues that they address, and where is it less than robust?
Yeah. So CDFIs are subject to some of the same market pressures as the for-profit lenders are. And so what that means is there's some agglomeration effect. There's some return to scale. And so CDFIs are more prevalent in bigger places. Even when we adjust on a per capita basis, we see more CDFI volume in bigger cities. And that could be in part due to poor policy design. Things like the Community Reinvestment Act that encourage banks to make deposits in certain geographies mean other geographies get left. But it also speaks to where philanthropies are located. But not just funders. It speaks to where it makes sense to have a loan officer, or where there's enough consumers that are proximate to one another that you could lend to them, enough development activity that you could lend there as well. So it really is a whole host of factors that come together that mean that bigger places generally get more volume. And that's by geography, but we also see differences in terms of the types of investments that CDFIs make.
And what are those differences? It strikes me that there's a lot of CDFIs working with small businesses, a lot maybe with community facilities like charter schools and childcare centers and that kind of stuff. Does that sound right? Is that where there's more of a focus?
Yes. I'd say historic market strengths in terms of penetration, things like charter schools, health clinics and centers, some arts and other facilities, affordable housing, multifamily housing. Small business is an area, especially in the microloans, where there is growing interest, but still CDFIs serve a very small share of the total deal flow.
Right. Yeah. What about in home ownership? I mean, HomeWise, where I work, is focused a lot on home ownership, especially as a wealth building strategy, but also as an affordable housing strategy. Because as you know, people that own their own homes tend to pay less portion of their income on housing expense than the people that rent. That's true for low income households as well. How do you see what's the CDFI involvement overall in terms of promoting or increasing access to home ownership?
There are more than a few, but still, as a share of the total CDFI landscape, not many CDFIs that have really taken the step of building out a retail consumer-facing presence. There's a lot of reasons for that even better than I do, but you got to have brand awareness among a much bigger share of people. And so small business micro lenders have done that to varying degrees and in varying ways. And certainly the community development credit unions or CDFI banks have oftentimes built more of that presence. But for the loan funds, it's been really hard and slow, and it's easier to lend to 12 developers than it is to hundreds or even thousands of would-be homeowners. And so all that to say, in the home lending space, CDFIs have really historically been a very, very small player. I mean, almost missing in action. Now, they have a better presence in some markets, but they haven't historically done a whole lot to move the needle on home lending to consumers who are not well served through the market otherwise, which is why I'm excited by the handful plus of CDFIs that are really working to move forward in home lending.
Yeah, and it seems it's kind of surprising to me because, we have more understanding and recognition that America has just not moved the needle on the racial home ownership gap, right? The gap is between black and white households. It's pretty much the same as it was in 1968 when we passed the Fair Housing Act. So we've made very little progress on this, and there's this growing recognition how the home ownership gap substantially drives the wealth gap, the racial wealth gap in America. So if you want to close that gap, like one way that you do it is help improve access to home ownership. But very few CDFIs are doing it, and we're not making a lot of progress on that. So the question then becomes, and they're in a really good position to do stuff, right? I mean, a CDFI in Cleveland could solve the, they call it the small dollar loan problem, right? That what loan originator wants to do a $60,000 mortgage, even though you can buy a house for that in Cleveland because you're paid on commission and there's no incentive to do those kinds of loans. But CDFIs are in the business of serving underserved populations. So they're in a great position to help address that kind of problem. That's just one example. So it seems to me like if more CDFIs got into this, it's going to be really crucial getting them into this is going to be crucial to helping increasing access to home ownership, to work with people who've been left behind. How do we go about doing that, right? How do we get more into the space? And the example I'd give is, hardly any CDFI was financing grocery stores 15 years ago. And when except for the reinvestment fund in Philadelphia, when that got on the radar and the whole issue of food deserts got on the radar, just like the home ownership gap is now getting on the radar, the CDFI fund created a healthy food finance initiative. And because there's capital available to address that issue, there's a bunch of CDFIs all over the country now doing grocery stores and food deserts. It's real important work. Do we need to do something like that for home ownership? How do we get this to become more of a priority?
If we really want to grow this sector and this space, we are going to need to see a dedicated federal program. We're going to need to see the Affordable Housing Homeownership Fund, the Affordable Ownership Housing Fund, akin to what we saw with healthy food finance. And the reason is there are real costs to doing this. There are technology costs, there are labor costs, there are marketing costs. It's not as easy as being this type of multifamily lender and adding this new program to your toolkit. It really is completely different regulatory landscape, financing landscape, and it requires different people and different skills. That said, those skills exist. This is out there, and there really are these tools and platforms and resources. There's a secondary market even that works pretty well. And so we really just need some federal or even state subsidy to get these programs out there. And then we also need, a new set of leaders who are willing to prioritize engaging directly with the consumer, the borrower, the would-be homeowner, and helping them in sometimes a pretty time-consuming way.
Right. Yeah. But like you say, these things are out there. It's like we do know how to do, the components exist. It's not we're not trying to figure out how to develop a vaccine for some pandemic virus, right? It's like you don't need that kind of genius to do this. You just got to assemble the parts and go after it.
And we don't need one in every city, right? Like ideally, we wouldn't have one in every city. Maybe we'd have one in every state, or every big state, maybe a couple or something. But we don't need 1,200 new lenders. I'd rather have 24 with a decent amount of scale.
Right. So how would you go about encouraging that to happen? What's the role of the things like the CDFI fund or the federal government or HUD or philanthropy, which doesn't seem to be very involved in home ownership either? Where would you look for that kind of leadership to emerge from?
Yeah. Well, Mike, if I had $1 billion, I'd write that check. Listen, we're gonna need the folks with the resources to move forward in prioritizing this work, and that absolutely includes government. It also includes the traditional partners of CDFIs that have been their lenders and funders, notably the banks. And it will require the high net worth and traditional philanthropy donors to step forward as well. And so, again, you'll know better than me, but I would think in the, pulling out a number, $10 million range, you can stand up a program and get it going in a meaningfully big way in a new market. Right. And that's if you're setting it up afresh. But there are other groups that just need more incremental shifts. And maybe that seems like a lot of money, but it's not when you think of the number of households that could be touched, not just in the near term, but in the medium term. And the nice part about these models is they can really have a somewhat self-sustaining element to them, not the upfront design and build costs, but these loans are generally perform pretty well. And you add an origination fee to them. This isn't high philanthropy subsidy forever kind of model.
Yeah, it's really helping social enterprises get started. And then and it does become large. HomeWise is largely self-sustaining on the fees that it earns and what it does. So you can scale that because you can predict the income, and as you grow programmatically and have more customers, your income grows, and then it's a virtuous cycle, right?
Yep. And it's one that we need to get into.
Yeah.
So,
well, let's hope that somebody's listening and say, hey, I want to play a leadership role in this, because this is something where we could move the needle if we focused as a country, I think.
Absolutely. Mike's cell is 222. No.
So, well, this is really good. And Brad, I really appreciate you taking time to talk about this stuff. And I'm looking forward to further conversations with you, because I know you're looking at I'm very focused in New Mexico and working on home ownership stuff, but but you see the broader range across the whole country. It's a very helpful perspective. So
Yeah.
thank you for taking your time and sharing your knowledge here.
Thank you. Keep up the good work.